weekly Sunday update. All right, so here's a friendly disclaimer is that whatever we say is more for educational purposes. At the end of the day, whether you make a decision to trade or otherwise, please use your common sense and possibly our analysis along with it. All right, we are not telling you directly to buy or sell anything at all. Now, with that, let me change to my trading view. Right, so first of all, this week you will start with me. Hi, I'm Lloyd. I'm doing technical analysis, and later Alexis will come in with her fundamental analysis. Let's see if any of the pair matches. That's always the fun part. All right, so as usual, I've always ranked my strongest at the top, the weakest at the bottom, and the three pairs in the middle. Usually, I have no idea what they are doing, and I tend not to trade them unless there's a really early setup. Oh. Now, the first of all is dollar. You can see that dollar I ranked right at the top. Now, I remember before going to Bali retreat, I was hoping that dollar will actually touch this level. It did not, but nevertheless, uh, whenever I say that, I also understand that, before it starts touching, it might already reverse up, which it did for the last week. Now, so officially, actually, dollar is already in a range, but it still have a bit more to actually reach all the way to the $100 level. Now, at this stage, I'm actually sentimentally, I should not say fundamentally, sentimentally, I think I'm a bit afraid. Yeah, because if the economy is well, dollar should actually weakens. Usually when the dollar strengthens, that means the economy might not be that well. There's a fair bit of fear in the markets. But might be too early to tell because for the past, I would say, many, many weeks, price is just ranging here. Yeah. So hopefully it doesn't break the $100 level. If it does, then officially I think we are in a fear environment. But for now, for the next 1 or 2 weeks, I would say dollar should strengthen a bit more. Now, next on my list is actually the Swiss. Now, Swiss on the very short term, mid-term, I would say, you can see that it is actually strengthening up. So it does have a lot more space, wider space, in fact, to go to 130 level. So with that, this is a pretty strong level. You can see in the past 2 years, price has only reached this level once, it got whacked back down, so it's going to challenge it this second time. So let's keep our fingers crossed. Now, third on my list, Aussie, I would still say that it might strengthen. No, it should strengthen simply because it has the minerals in play, commodities in play. But for the next 1 week, I suspect that it might actually weaken a bit more, or it might not really. This is the part where I'm going to say I don't know. But technically, it does looks like it is already on a trend. I'm just hoping that it might retrace a bit more, a deeper retracement. But if it does not, and this is why I'm going to say that there might be an early play next week for it to strengthen even further all the way to $75 level. So keep a lookout for any pair that is against the Aussie currency. If it prints a double bottom or even a first higher low kind of trade, that's the part whereby I'll be interested to get in. Yeah. So again, I have to be very clear that I don't know because I'm not trading from a level. Yeah. Kiwi, this is the part where I will say I really don't know. It is just really messy. I don't even know where it wants to go. It's not near a level, neither is it in a very, very clear cut trending phase. So I'll give this a miss. Now, I think the Brits got to really make up their mind whether they want to rejoin by the EU or otherwise. But for the time being, it's not joining the war, it's not joining EU, it's not even joining anything. It seems like it's just successfully isolated itself. Oh, that's a big say. Now, the pound has been actually really just ranging. Again, this is a really big, I don't know where it wants to go. So I don't think I'll be trading Kiwi and pound for a next 2, 3 months or so until it actually successfully breaks a level. Then I would say it's out of the range. Now, unless you're a range trader, then Kiwi and pound will be interesting to you. But otherwise, I'll just, as a trend trader, I'll keep it up. And the same story will be euro. Is in a even wider range than euro than pound compared. Yeah. So with that, I'll just leave it out. But that actually makes an interesting play if you go euro pound for range trader. Can consider. Now Japanese yen, I think if I'm not wrong, I think I read it. They actually tried to intervene once or twice already, but looks like the result wasn't very successful. It's still raised to the bottom. You can see that last week bar is still one mini bearish bar, but prior to it is really bearish bar. Yep, so I'm still saying that it has plenty of strength to actually continue weakens more, unless the government steps in again, which I doubt they will. This is just my sixth sense as a trader. So with that being said, I would still say yeah, plenty of weakness going on in Kiwi. And the last on my list is actually the Canadian index. You can see the price just really refused to break $74, tested multiple times, and I think it's just going to whack back down at least to 71.50. So I would still say plenty of weakness to go about. So with that, we're going to pair the strongest against the weakest. And first on my list is the dollar cat. I'm a, I'm a swing trader, so I look at H4. You can see that price previously is really consolidate, breakout. So there might be some sort of consolidation going on, and then it breaks out again. So with that being said, I don't think we should rely on price action too much on this. More go with your trader sense, and then, but what you should rely on more is actually have a proper stop loss placement. Be wider away because price might just range a bit before it breaks off. This is going to be a tiny bit of consolidations. Yeah, so it's not those kind of big wide movements. Yeah, but still you need to be a bit responsible. Let's put our stop loss slightly further a bit away, maybe 1.5 ATR for price to fluctuate before it actually takes off again. Next on my list is actually dollar yen. Let's have a look at it. So dollar yen, not any better in terms of the consolidation. You can see that it consolidates small bars in the past, breaks off, small consolidation, it might breaks off again, but every time before it breaks off, it seems to have a very wide bar that seems to takes out a lot of stop losses before it goes off. White bar takes out a lot of stop losses before it goes off. So if you're going to trade any of these two, be responsible to yourself, give a wider stop loss to accommodate for such weeks. Otherwise, you can always go for the easier pair. So Cat Swiss. So you can see that Swiss is my second strongest and Cat is my actually weakest. So I will happily play this pair. And this pair actually has a cleaner move compared to that. So for a time being, you can see that price give a higher, high, high, low, high, 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 low. Finally, it breaks. Now, what I'm waiting for is price to actually might bounce off this level, giving a lower high. I'll still be happy to trade from here. If it does give a lower high, let me point out the level. Yep. So if price comes back to this level, giving a higher low, I'm happy to trade. Or if it continues breaking, and this is even a significant level to me, and a high low over here, sorry, lower high, not high low, lower high. Yep. So if price give me a lower high, either at these two areas, I'm happy to go for a short. And then, of course, you have Swiss yen. Also a slightly cleaner move, I would say, compared to dollar CAD and dollar yen. So, again, Swiss is my second strongest. Yen is all the way at the bottom. I'm just waiting for price to back up, which it already has. Now, it is in fact actually retesting this level. So I'm just waiting for it to give me a nice looking one more rejection bar, maybe a tail bar. If it gives me that, I'll be happy to actually get in. So with that, that will be the end for me, and I'll pass it over to Alexis. Hey, I might have a question. Let me see. Oh, there it is. All right. So with that, I'll pass it over to Alexis and see if any of our pairs actually match. Seems like a matchmaking contest.
All right, hello everybody, and let's just take a look at some of the pairs. I would like to start off first. I think definitely there are some matches this week, right? Okay, let me go to the daily. Okay, so what I'm looking currently is the pound Swiss, which we were also looking at. For those of you who follow the weekly fundamentals with me, I've been looking at pound Swiss, pound dollar. Now, very mainly, simply is currently the US economy stands out as the strongest, I would say, diversified engine among the major advanced nations. Now, the private domestic demand is healthy, surprisingly, right? And it's fueled by a almost 10% increase in business investment, especially in the deep tech AI infrastructure and data centers. So while inflation is feeling the energy pinch due to that war situation, there is still corporate cash flows going into the US. The labor market is still pretty resilient, that is kind of insulating the US from any damage from the oil energy crisis, and it allows the Fed to keep the interest rates higher for longer without actually deciding on whether they should push the interest rates down in the short term. So this is why the US still structurally is strong at this point. And for the Swiss, all right, it has a decent enough stability over there, 4.6% year-on-year growth for Q1. And although the recent energy and freight disruptions because of the war gave a minor contraction in manufacturing, the domestic sectors, i.e. the banking, insurance, construction, is still quite okay. So, oh, sorry, that's Singapore. Okay, so Swiss actually remains a defensive safe haven. All right, so I agree with Lloyd here that the Swiss actually is pretty decent. So pound Swiss is what I'm looking at because UK is currently one of the weaker major economy on a relative basis, and there's a slight technical bounce, but I think it's going to bounce weaker as well. And I think UK and Euro both have the same situation. They are exposed to the imported energy shocks, meaning the Bank of England and the European Bank is a bit trapped in the sense that they can't really cut interest rates aggressively because inflation is sticky because of the imported inflation figures, right, imported due to the oil crisis. So for pound Swiss and pound dollar both, pound Swiss has already, I think we were looking at since last week, I was waiting for price to retrace, so price has retraced to, I would say, it might be clearer on a 4-hourly, but on a daily time frame, it has to retrace about 105.8 around there. I was hoping for it to kind of hit 1.06 a little bit cleaner as a psychological level, but it didn't really touch there. Instead, it's already kissed this 105.8 level and started to go down already. So on shorter time frames, I think we should be able to find a little bit more pullbacks, a little bit more cyclicity towards the downside. Structurally, it has broken the 1.05 level, so I'm looking at the 1.05 level and below for a TP level over here. SL is somewhere probably be above the latest swing high, so 1.06188 on this chart is where I'm going to look at where, I think I will be wrong in the positioning of this trade, right? So this is the potential direction I'm looking to go into. Now, pound dollar is another currency pair. Pound dollar looks a little bit cleaner. Price has been rejecting quite strongly off this 1.345 level. All right, so this is a daily time frame. I'm looking for price to continue rejecting off this level and give us maybe a 1 hour or 4 hour change of structure towards the downside, which means I'm looking for cyclicity towards the downside. So for the 1 hour time frame, you can see price is just ranging above here very tightly. What will be interesting for me over here for the 1 hour, if price starts to break, give us break below all these previous lows over here. On the 4-hour time frame, again, very, very choppy, but what I do like is the constant rejection of the 1.345 level. So I'm looking for this upper resistance level here to hold, and then I'm looking to take this short. TP level for conservative, I think 1.3380, which is just the previous swing low or about here. This would be a conservative TP. I don't know whether price would really be able to go down all the way here for the pound dollar, mainly because the dollar is still a volatility play. Because of the massive amounts of news and indecision in the market, the gold prices, the oil prices are all swinging like crazy. I think this will also cause the dollar to have a bit of volatility into it. So hence, I'm not a big fan of holding any dollar pairs for very long. I'd rather trade it when your strategy presents the entry and then exit at the TPs, or protect your entries is what my personal preference is, because I'm super conservative in that sense. Now, if that being said, if we take a quick look at the oil prices, right? So this is the oil chart. So this is the daily time frame. Okay, so oil. This is not the chart I use. Okay, so oil over here. Again, it's really ranging between, I would say, 112 and 85, and price, as long as price is range bound inside here, I think this will give us the answer on what the markets are currently experiencing, which means I think most markets for a while have already been ranging and will continue be ranging. So this is the period where I think if you have range strategies or breakout strategies within the range, it will really benefit you. But trending strategies are currently a little bit iffy at this point, because due to the uncertainty in the market, once oil and gold are both rangy, it's very difficult for other currencies to start to break out of the range. So if you really do notice, a lot of currency pairs are kind of stuck in some kind of large range at this point. And to get a bit of clarity, we kind of need a clear direction on where the Iran-US situation is going. And the probably the irritating thing is every weekend, Donald Trump will say he's going to open the Hamas. Every Monday, we find out that the Hamas is not going to open, right? So it's like a weekend you want to open, weekday you close. So this will really cause all this all these asset classes, I would say, to just range down. And you can see this is gold as well. Very, very clear that what used to be, I think gold, if you zoom out, gives the clearest indication of what the entire market is doing, right? So gold is traditionally a very trendy asset class, with of course the occasional pullbacks. But ever since Donald Trump and the Iran-Ukraine war started, you can see gold is tightening its range. Sooner or later it's going to break out somewhere, whether to the downside or to the upside. But if you look at the gold and then you compare it to the oil prices, they have a very similar price structure, spikes to the upside, spikes to the downside, and then stuck between the high and lows and moving sideways for extremely long time. So it's a range bound market. Range strategies is what I'm looking for. Trading off support and resistance is also something that will interest me. And I think the other thing that will interest me, which is a bit more volatile, would be the dollar yen. Mainly because I think, as Lloyd said, right, there's a previous few attempts at intervention. And the intervention usually comes when the price is nearing the 160, which it is about reaching there. So it really depends next week whether price will kiss the 160 level, and then they might again be little bouts of intervention to the dollar yen. So I prefer to short dollar yen. All right, mainly because the intervention will push the yen a little bit stronger, and it's a very short-term short. So it's not like a sell and hold for a long period of time. So it's more of a volatility play over here. So that's it for me. I think this is about all I'm looking at. Mainly, I think a lot of my pairs, I'm glad to say, is pretty similar to what Lloyd is looking at. He's looking for slightly confused, weaker pound and euros, which is very similar to what I'm looking for. And we're looking at stronger dollars and Swiss, which is also the same for me. So I'm glad the technicals and fundamentals are aligned. Occasionally they will, not always, but I'm glad it aligned this time, because in the range bound market, we kind of need as much probability on my side as possible. So, yep. Anything to add, Lloyd?
Oh yeah, I actually forgot one pair which I actually highlighted out. Let me make it up. So sorry guys. Let me grab
Bonus,
this.
some bonus pair.
I just realized I actually forgot one pair. All right, the pair that I actually forgot to actually end off with before I hand over to Alexis is actually Euro Aussie. So let's
Oh, I
revisit
like
Euro
that as
Aussie.
well. Yes.
Yeah. So you can see that again Aussie is actually the third on my list, high up. So it's a long. Like I said just now, is that I'm hoping that it might actually touch 70. It might or might not. But the possibility is that does it have a huge potential upside all the way to $80 around here? I would say yes, the potential is there. And then let's have a look at Euro weakening. So again, Euro all weakening all the way to 110, breaking this level. Uh, Again, I cannot say that it will definitely break, but the potential is there. So pairing these two, so I'm using a lot of potential. But looking at the chart for Euro Aussie H4 is that it has been on a downtrend for quite some time already. I mean, for H4 perspective is quite some time. So it has last week undergo a complex retracement. You can see a higher low, higher high, higher high. Then it just at the end of the week, it resumed back its downtrend. So you can see a lower low, lower high, lower low. This might be the lower high that we are looking for. Now, if you are uncomfortable trading into a horizontal level, which is this area, it has actually touched 3 times already, then just wait for price to actually break the horizontal level and giving you another confirmed lower high before you actually join the fund. Yeah. So this is already a trend trading move already. So looking at the weekly currency strength, I'm just betting on the part that potentially it might actually turn into a very, very long-term downtrend. Yeah, so that's the outlook I'm having for Euro Aussie. So with that, that is the end for me. Lexis, anything to end on with?
No, all good for me.
All right, so with that, have a good day now.